Well, good morning, everyone. I'm David Paul, the Managing Director of VectorVest in the UK. And I'm pleased to say that the probabilities favor a relief rally over the next couple of weeks. We had a good day yesterday on the American markets, and in the overnight markets, the market has moved up considerably overnight. The S&P 500 is at an important level as I speak. That level defined by a 78% Fibonacci retracement of a last previous range. I think it needs to get up through that level. And if it does close above that level today, then I think that we'll get a decent relief rally into November. I would be playing it as a relief rally until it proves itself to the contrary. So if we have a look at the VectorVest UK market timing layout, that's this year, ladies and gentlemen, and that's a medium-term market timing model that we refer to at VectorVest as the DEW. It gives clear objective signals as to when you should be in the market and when you should be out of the market. And the last signal, you may see that red triangle, that last signal, that printed in the last week of August. So we've been telling our customers not to buy any stocks at all. Watch your stop losses very carefully for the whole of September, now half of October. There's a little bit of light at the end of the tunnel in that, as you can see, the price has made 5 waves down, but the momentum indicator that's used, price has made a falling bottom, the momentum indicator has made a rising bottom. And that's normally a sign that there's going to be some form of bounce. Early days yet. All of the measures of the trend on VectorVest UK are down. In the US, the short-term trend has moved to an up signal. Longer-term measures of the trend are still down. So it's early days, but I'm hopeful for a rally that can last at least 2 or 3 weeks. And then after that, we will see. But I'll be playing it, as I say, as a relief rally until it proves itself to the contrary. What to buy? Well, in these videos, I've talked about lots of shares that I think have got merit if and when the general market does turn. And it's still got a bit of work to do to turn by that market timing model. But one of the ones I do like is for Imprint. The fundamentals are good on VectorVest. And as you can see, it's moved up very strongly. In really great volume as those earnings started to come in. It's now gone sideways in what technicians would refer to as a bull flag pattern. And yesterday found a great level of support at the lower trend line defining the pattern. So what to do? It's on a hold recommendation. I think that 2 things. One, we need to wait for the general market to print a buy signal. And secondly, we need for the share to move on to a VectorVest buy recommendation or close above the top trend line, defining that flag. If that's the case, then my little vertical line should in fact mark out the target, and that would take the share to about £50. So that would be very nice indeed. I would make the end of my year after a pretty awful 2022. This is Tongela. This has been one of the saviors of the year. And as you can see, it paid a big dividend, a huge dividend, a gap down after the dividend. It's found support at previous resistance, which is frequently the case. And I note it's up quite nicely again this morning. So again, it's on a hold. If that would move to a buy recommendation and the market moves up, then I certainly will add to that position. It's significantly undervalued, growing earnings strongly. And those of you that are technicians, if you look down at the MACD is printing what technicians refer to as a reverse divergence signal. Some technicians refer to it as a slingshot. And that's a high probability technical pattern for more upside. So Tongela looks good. Cape Tech, this is a contrarian trade of mine. Its earnings are growing strongly. This is a weekly chart I'm looking at. As you can see, it's pulled right back to a 62% retracement of that big range, going right back to the COVID lows. That is a confluence of an old high, that 62% retracement, and the market has fallen down to that in a falling wedge, which is a very bullish pattern. And again, we have nearly a 2-year MACD weekly reverse divergence. It's on a sell signal, far too early to do anything. But again, if we see if the general market turns, we can see some reversal signals on the chart, moving to a buy recommendation, then I think that's one of the ones that I'll certainly be looking at quite soon. And then finally, a share I haven't spoken about before. It was noticed by one of our subscribers out in Oxford, the Beasley Group. A really nice chart, earnings coming in nicely. And as those earnings have come in, the share has moved from being sort of fully valued to undervalued. It's breaking up nicely, and it's one of the few today that I've spoken about that's already on a buy recommendation. So the share moving up quite nicely when the general market, in fact, was sick. That's always a good sign. Leading stocks tend to be the first to move when this relief rally starts and takes place. So those are 4 stocks. In previous weeks, I've talked about Games Workshop, which has had a good few days. I've talked about Watches of Switzerland. I've talked about Volex, to name a few. But those 4 look good to me, but we need to sit on our hands. Doing nothing is much more difficult than it would seem. We need to sit in our hands for a couple of days and let this market confirm a turn. I'll be on here in the next week, I think. We'll discuss that. And anybody that wants to take a trial of VectorVest, if you go to vectorvest.co.uk, 30-day trial is going to cost you about $5, and you'll certainly have access to all my weekly meetings and videos that summarize the market every couple of days. Thanks very much indeed.